Hello, my name is Abram Taylor, and I'm going to talk to you about the yield curve for the week beginning April 22nd and ending Friday, April 26th. The entire yield curve fell throughout the week. Treasury yields moved slightly lower for the week, with most of the movement occurring on Friday. Because the yield curve fell throughout the week, it was expected that long-term security rates fell more than short-term security rates because of maturity risk. The curve flattened for a small margin at two separate points of the week, signifying government manipulation of interest rates through purchasing treasury securities of certain maturities. The curve straightened at some point during the week, although it was very lightly. The Federal Reserve has been buying treasury bonds to help lower the yield because of concerns with U.S. and global economies, they have been showing slow increase, and the investors are tending to shift money into safer assets and transfer money into treasuries and away from stocks. The decrease in yield curve means lower forecasted rates for one-year rates using the expectation hypothesis. The interest rate forecast was affected by mortgage rates dropping last week to record lows. The average rate for a 30-year fixed mortgage dropped to 3.41% from 3.43%. You also see the yield curve steepen right here in the forecast as the economy the yield curve steepens and the forecast as the economy picks up when the Federal Reserve begins buying treasury bonds to help the yield. Steady hiring and near record low mortgage rates have helped boost sales, and more Americans are moving out on their own after living with friends and family during the recession. The yield curve steepened slightly higher from Monday to Tuesday. The Dow rose 0.0% and the NASDAQ gained 1% on this day as well. An index of inflation tied to spending patterns increased 1% from a year earlier, the smallest gain since October 2009. Also on Tuesday, there was a brief tanking in the market due to a fake Associated Press tweet saying there were explosions in the White House. But stocks still ended higher on Tuesday despite that. They came out with that tweet and they found out that it was fake. So they later posted another tweet that it was fake and got it out to the news, and the stock recovered. The stock gained momentum on Tuesday, but is expected to slow because of higher taxes and budget cuts and to drag customer spending down. As expected, the yield curve fell from Tuesday to Wednesday. However, it was only by a small margin. As you can see here, very close, not much change. There is very little visible change, but the day ended with a high of 0.13%. The lowest point of the day was at 0.05%, but it picked up to finish the day off a little high. Apple also made some big moves on this day by investing $100 billion back into shareholders to counter high-profile borrowers. The total buying size was not determined, but it is expected to have a big loss by the end of the week. The yield curve from Wednesday to Thursday changed very little. As you can see here, very little change. However, it is expected at the end of the week to have a little more of a drop. The yield curve finished at 0.99%, and maturities cut losses early with the starting rate of negative 0.43%. The U.S. stocks closed at a higher but small margin. There was a flurry of up and downs in corporate earnings that rattled the market early during the day, according to CNN.com. The trading has been choppy recently, and investors have been taking cues from the economic data and company-specific news. As you can see here, the largest change occurred from Thursday to Friday. The largest change in the treasury rates of the week occurred during that time. The dramatic drop in rates can be explained by the market concerns about the drop in rates at an all-time low earlier this week. On Thursday, the U.S. rate on the 15-year fixed mortgage fell last week to 2.61% from 2.64% last week. That's the lowest rate on record dating back to 1991. The previous low was 2.63% for a mortgage rate, and they're helping drive house sales up with those low rates, which is a major factor in economic growth in the United States. The yield was 1.72% on Thursday, and that's up from the 1.69% in the previous week. That was reflected on Friday by the biggest drop of the week occurring from Thursday to Friday on the yield curve. So it was a pretty eventful week from Monday, April 22nd to Friday, April 26th. And my name is Abram Taylor once again, and I want to thank you for listening.